please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Chartbusters. Well, the stage was set. We saw some cooling off in terms of crude prices. You had the dollar index as well that moved towards around 94.5 odd mark. So the stage was set to see a bit of a rally. And that's precisely what's happened. The Nifty is sitting with a gain of close to around 80 points as we speak. Asian markets as well are holding strong. And in fact, the good part today is after we saw that big bounce back in the final hour of trade in Wednesday's trading session, you have some follow-through buying today. So if you take a look at it from the lows that we saw on Wednesday, in fact, the market has given you returns of close to around 200 points. That's just on the Nifty. Hey, Mangalam, good morning.
Good morning, Nigel. You know, the stage was definitely set. It will be very interesting to see whether it can go ahead and elevate its performance from here or not, because we're at 11,450, which is equidistant from both 11,400 and 11,500. Why are those marks important? Well, because on Friday's trading session, we saw some writing on the 11,400 as well as the 11,500 puts. The 11,400 call writers, they're running for cover. The premium available on offer is close to around 150 odd points. So let's see whether we can build up and see more short covering in terms of calls as well. The 11,400 put, the bulls believe that is one mark they can defend. We have seen some writing on that one. Add to that, the 11,500 put too sees writing for the premium of 100 rupees. That's telling you that 11,400 is a mark that the street is looking to defend, primarily given the 11,400 put has the maximum open interest. Can we go ahead and can there be further short covering is something that we'll watch.
Absolutely, Mangalam. So let's kickstart the show then with all the top stories.
Absolutely. Let's do that. We have medicines this Friday morning. In a big boost to Sun Pharma and Spark, the US FDA approves eye drug Zelpros from Halol facility. The approval triggers milestone payment to Spark and other royalties, also negates concerns on Halol.
And the rupee stages recovery in trade today. All eyes on the crucial meeting this weekend, where Prime Minister is likely to take stock of the economy. IT stocks, they're in the red on the back of the rupee strength.
Sugar stocks, they get a boost from the Cabinet's approval to increase ethanol prices by up to 25%. Balrampur Chini, the management, joined CNBC TV 18, and they say this will see heavy bidding for both C and B heavy molasses with a price increase.
And Shriram Transport is in focus. SVL, the holding company of Shriram Group's non-financial businesses, is admitted into the bankruptcy process. The stock, however, is off the lows as the amount involved in SVL is unlikely to have any kind of meaningful impact on the P&L of Shriram Transport.
RCF gains as the Cabinet approves transfer of the company's land to Mumbai Metropolitan Authority.
Well, it's clearly all about the sugar stocks. Actually, you pull up some of these stocks. Movana Sugars, that's moved to the high point of the day. Bajaj Hindustan as well is spiking up as we speak. And even Sri Renuka Industries, keep an eye out on that stock. That as well has moved to the high point of the day. So quite a few of these stocks, they're moving around, and they're moving around on very, very high volumes in the last few minutes. And Balrampur Chini as well, moving high, Mangalam.
Well, it's a Friday. I think the song for the night would be Sugar. Yes, please.
All right. So that's, that's about some of these stocks. So good to see, actually, the breadth of the market as well is looking very good. 1,600 stocks advancing for around 400 stocks that are declining, and we're building onto those gains. So this is perfectly set up now. 11,460. We started at around 11,430, 11,435, and we are built on those gains. So pretty good going. Lupin has moved to the high point of the day. Tata Motors as well is participating as we speak. Prakash Gaba joins us in the studio. Prakash, what's the trade on the Nifty? Well, it's you'll require a lot of guts and a lot of conviction really to go ahead and buy the Nifty after the run we have seen from Wednesday's lows. But two-part question. One is those that went ahead and bought it and are sitting on good gains, would you tell them to book some profits? And the second part is, when can someone look to buy the Nifty if they want to buy the Nifty now?
Thank you very much. Well, the first target of 11,460 is achieved. It's trading somewhere there now. If someone is, your question is, if someone has bought it, what should you do? It never hurts to take money off the table. When you see a gap up, it's a gift.
Okay.
Someone gives you a gift, accept it with grace. Take it.
So,
that's one. Take your money off the table. Now, second question, where do you enter now if you want to? I'm waiting to enter if I get a dip. Now, if I don't get a dip, what do I do? Do I chase? Of course not. I would wait for it. Good place to buy is if it dips somewhere closer to it. My setup is not ready as yet. It might come at 11,400 or 11,420 zones. If we get it there, perhaps I could consider buying A. Or if it takes out today's high after some kind of a rest, that would again be a good place to buy.
All right. Individual stocks, what are your recommendations? And okay, go ahead.
DV slab looks good. I think it can climb to levels closer to 1320 zones. Stop below 1280. And I also like Yes Bank. Yes Bank looks like it's running. I think Yes Bank can climb to levels closer to 335 to 340 zones. It's heading up there. Stop below 320. It's going up.
All right, and before we let you go, a word on Titan, because, you know, after the lows that we saw on Wednesday of around 792, 793, we've recovered a goodish bit. Currently, the stock price is at around that 850 mark, currently making the highs of the day. This morning, we had a Macquarie report. On Friday, the initial dip came in on a Credit Suisse report. Now, Macquarie has written today that they see no problems as far as demand is concerned. Their channel checks believe that the second half is likely to do well. That's the fundamental call. Technically, what do you think?
Technically, I feel it's a good buy. It's seen a good down move. It's too much of a stretching on the downside. The unstretching has to happen, and it started. It started on Wednesday. It's continuing up. I think Titan can climb to levels closer to 880, even possibly 900 zones. So buy today and hold for a few days. You're better off, richer off. And I would have a stop somewhere closer to maybe around 835, 836, and trade long on Titan. It's a good bet.
All right, 835, 836 is a stop, and Prakash believes it is a good bet to up to levels of around 880 to 900. With that, we move on to the macro picture. Now, amidst rising fuel prices and depreciating rupee, the Prime Minister is likely to hold a crucial meeting this weekend to take stock of the economy. A top government official told CNBC TV 18, and I quote, "We have to hold our nerves." According to sources, the government is of the view that it can't take panic steps on both the rupee as well as the fuel. So the big question is, will the PM announce any measures in his weekend meeting? We spoke to the PMEAC member Surjit Bhalla and Pranab Sen, who is the former principal advisor of the Planning Commission, on whether it is time for the government to act. Their stance was very clear, and I quote again, "The government should not react at this point." Hear them out, or rather, one second.
Yeah, I think on that note, you know, Shireen joins in with a check on the key issues. Shireen, over to you.
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target, but remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduced VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The finance ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out, to see how the Iran sanctions impact the oil markets, and maybe, if need be, act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Block hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. The government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
They are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamentals.
Well, that one's closing in on the higher end of today's trading range, and both for the Nifty as well as the Nifty Bank, we've seen some contribution coming in from Yes Bank. Not a big contributor in terms of the weight to that index, but it's up around 4%. Just keep an eye out on Yes Bank. There was a lot of nervousness. There still is a lot of nervousness with regards to developments at the top, but we will keep an eye out on how this stock moves. It has been fairly volatile of late. Another stock which is buzzing is GSK Consumer. That one should come up for you. Very low volume stock, but the ticket size is high at around 7,600 rupees. Remember, over the last two trading sessions, the stock is up about 7-8%, and that's primarily because there are news reports, various news reports, which suggest the bidding for Horlicks has begun. This was supposed to happen in mid-September. Remember, the company has put both Horlicks and Boost, or the India FMCG business, on sale. There are a lot of contenders. International contenders include the likes of Nestle, GSK, Nestle, Coca-Cola, Reckitt Kaiser, as well as Kellogg's. We will keep an eye out on how this story pans out over the next couple of months, given November is the time by when the company expects to receive some clarity and finish this deal. So let's keep an eye out on GSK Consumer as well. But this week marks the 10th anniversary of the Lehman crisis, the global financial crisis that was triggered by the collapse of Lehman Brothers. Their bankruptcy was the key inflection point of the financial crisis in America, which had its ripple effect in all major economies of the world. Earlier, we spoke with the man who braved through it all, the former governor of the Reserve Bank of India, Mr. D. Subbarao, and asked him what could he recall from the 2008 Lehman crisis, and was the RBI aware and prepared for such a crisis?
Lehman event was a big bang event, and the Reserve Bank, the experienced staff there, including Shamla and other deputy governors, read the situation very well, very correctly, that this will have an impact much more than the earlier isolated incidents, and that we must be prepared.
You're right, of course, that you were, of course, before September 5th, 2008, the finance secretary, and therefore, you know, all sides were kind of somewhat prepared. How did you look, I mean, how was the Reserve Bank prepared? Did you get a sense that, you know, they were preparing for it for months or something?
No, I didn't get that sense. You know, if there was one central bank in the world that was actually prepared for the crisis, it was the Reserve Bank of India, because as we now know, it's well known that the RBI under Governor Reddy had instituted macroprudential measures. In fact, macroprudential became a fashionable term after the crisis, but much before it became fashionable, the Reserve Bank had tightened the regulation of the financial sector, both banks and non-banks. So there's one central bank that is prepared. It was the Reserve Bank of India. But even then, I would not say that the Reserve Bank saw a crisis of this magnitude and this proportion unleashing on us all of a sudden. And that night was actually quite a bit of hectic activity for all of us in the Reserve Bank.
Okay.
The night after Lehman Brothers collapsed. If you recall, at that very night, we had done two things. The first thing was to ring-fence the two subsidiaries of Lehman Brothers in India. I think Lehman Brothers had a non-bank finance company and a primary dealership. The first thing we did was to issue a statement ring-fencing them so that no money would go out from them. The second thing we did was to issue a statement that the Reserve Bank is keeping a close tab on the developments and is prepared to take whatever action is necessary. It was a very bland statement. In fact, because I was new to central banking, I was wondering about the necessity of issuing a very bland statement like that. But in the event, the experience, the cumulative experience in the Reserve Bank guided us into doing the right thing, which was to release a statement. And I think that went a long way in assuring financial markets the first thing in the morning.
As we speak, the markets are holding with strong gains. As we speak, the Nifty is up close to around 90 points odd. But let's focus on the broader markets and a couple of stocks then. Titagar Wagons, that's the stock in focus. We want to understand what's the outlook for FY19 and what exactly is the ordering status in terms of wagons. We have Mr. Umesh Chaudhary, the MD of the company, who joins us. Hi, Mr. Chaudhary. Thanks so much for joining in. Want a quick update, sir? What's the status currently in terms of those wagons that were up for orders? How many were up for bidding and how many did you bid for? And by when will we know the results?
So, good morning. The tender was out for about 21,000 something, close to 22,000 wagons, which is the highest number of wagons procured by the Indian Railways in its history. We've of course bid for the entire quantity according to the RDSO capacity rating and the position and the reverse auction, and there's a complex formula based on which the orders would be distributed or allotted. That would be known maybe in the next, there's no definitive timeline, but maybe in the next 8 weeks, 8 to 12 weeks at the most. But overall, the outlook of the industry looks very well because the railways are doing well, the railway traffic is growing, and they've invested a lot on capacity creation in terms of infrastructure, and now they are investing in terms of capacity utilization by investing in rolling stock. So the outlook for the Indian Railway wagon demand and the private sector wagon demand looks
Mr. Chaudhary, sir, you said that 21,000 wagons were up for bidding. In that particular tender. According to you, what's your hope? Do you want to get 10%, 20%, 30% of these wagons that were up, in terms of this tender?
So you see, that's very difficult for me to make a guess as to what will be the percentage. I can only share with you historically what has been our market share over the last years. Between ourselves and our subsidiary Simco, we've always had between 20 and 25% market share. So, as I said, that the distribution of quantity is based on a number of parameters. It's a competitive bidding.
So anywhere between 4,000 to 5,000 wagons is what you can
guess a number. Historically, that's historically been our market share, but I don't know what will be the market share this year. That's something that will be only known when the orders are awarded.
Mr. Chaudhary, then a question from my end. You spoke about the reverse auction that is taking place as far as the tenders are concerned. So in that case, will these orders come at the cost of margins because there will be fairly competitive bidding, and does that dilute your margins?
So this is the first time that the reverse auction is being followed by the railways for procurement of wagons. So we need to wait and watch how the mechanism plays out. But one thing is for sure, the wagon industry has suffered a lot when a couple of years ago, when some people in their in their desire to get larger orders, quoted prices which were uneconomical, and therefore I don't see that people are going to end up making the same mistake.
Okay, all right. Mr. Chaudhary, if you could give us a sense of historically what's been the margins that you enjoy in terms of these railway orders.
On an average, between private orders, railway orders, we expect an EBITDA margin of 10%, give or take a couple of percentages, depending on which type of wagon, who is the customer, and so on. And I believe that is a margin that we should be able to maintain going forward. Also, the demand is quite large now.
What's the differential between margins of railways and private?
Not so large. So I think there is enough for people.
What's the differential?
It depends on a wagon type basis, but yes, the private wagon generally fetches you a couple of percentages point extra of EBITDA margin.
Okay, let's get your order book then, Mr. Chaudhary. What's the current order book? And break it up for us. How much of it is coming in from the government and how much of it is private?
So the total order book that we had in the last quarter, when we declared the results for the last quarter, Indian order book was about 1,300 crores. I would say about 500-600 crores was from the railways at that time, and then there was other orders. So there were not only private wagon orders, but we have some orders for the bridges, we have some order from the Navy, we have some orders from the defense. So all combined was the balance. So the total order book at that point of time was 1,300 crores. We'll come out with the next updated order book number when we declare the next quarter, the current quarter results.
Right, we're almost two-thirds or almost towards the end of the second quarter, Mr. Chaudhary. So far, what has the order inflow this quarter been? And what do you expect for the remainder of this year? How is execution per quarter likely to pan out going forward for the next couple of quarters?
So as far as order inflow from the private sector, railway orders are all bulky orders. So, the last order that was placed was earlier this year was about 9,000 wagons, where we got about 24-25% market share. Then this is going to be the next 21-22,000 wagons that's going to be finalized. So railways, there is no interim ordering that takes place. Private order keeps on happening. So, it's on negotiation. Even yesterday, we negotiated and finalized some orders. So the order, I would say, from the private sector, the momentum is very good. The momentum is very healthy, both from the container train operator side, because their business is growing very well. The special freight train operator side. We also developed our own automobile carrying wagon, which was recently approved. So we are expecting orders to come from the automobile carrying wagon, which is our own design. So all of these, the order book is looking well. As far as execution is concerned, the industry has been, as you're aware, has been in a virtual dormancy for the last several quarters.
Right.
So we started execution of the existing contracts from the Q1. Q2 has
right, Mr. Chaudhary. Thanks a lot for joining in and giving us all those details. Right, completely run out of time. So the short point is that, the orders that they bid for, the result for that is likely in the next 8 weeks. More importantly, they won't have any margin dilution problems. They said between private and railways, they are likely to enjoy 10% margins. The stock at the high point of the day.